All right, hello. Okay, so welcome to the last tutorial video on IFRS 5, that's non-current assets held for sale and discontinued operation. So let's start what we call subsequent remeasurement. What is subsequent remeasurement? Now, subsequent measurement of the non-current asset or disposal group might lead to. Okay, what subsequent remeasurement is that now, we talked about the fact that for a non-current asset held for sale, you must one of the conditions or criteria to classify it is that it must be sold within what? Within 12 months after the date of what? Classification. That means 12 months after I've classified the asset for sale, we must have sold off the what? The assets. But I think that there are exceptions to that rule. If conditions are beyond our control, that is, we could not sell because situation or things happen that we could not control, then we are still committed, so we can still classify. So there are some times that we have a non-current asset held for sale that is classified beyond 12 months because we are trying to sell. But obviously beyond our control, we cannot sell. Do you understand? So for those kind of non-current asset held for sale, there are times that we might have to remeasure it again. Let's say as at 31st December, we measured it in our financial statement, calculated our carrying amount and our fair value less cost to sell, picked the lower of the two value and recognized the assets. Now, let's say by next time we have not sold it, we have to remeasure it again at the reporting date. So if we are remeasuring it, what value do we use? One, it's possible that when we are remeasuring it, we get a further impairment loss. What do you mean by that? That means that the asset falls in value again. Our fair value less cost to sell is lower than our carrying amount. What do? You recognize another impairment loss. It's also possible that the value of the asset has gone up from what it was before to a bigger value. You can recognize the increase in value, but subject to the fact that whatever increase you are recognizing must not be more than the previous loss you have recognized in the past. So let's say an example. Let's say in the past, we have recognized a total impairment loss of 100,000. Now, this asset, we now want to remeasure it. When we are remeasuring it, the value has now increased by 80,000. The previous loss we have recognized is how much? 100,000. So we can recognize the whole 80,000 as a gain. Why? Because the loss we recognize is still more than that. But let's imagine that the gain that we're now recognizing, or the gain that we now noticed, is 150,000 and our previously recognized loss was 100,000. Please, you can only recognize how much? 100,000, because that is the total impairment loss that we can recover as a gain. So that's like a limit. The limit of the gain you can recognize on a non-current asset held for sale is what? Is your what? The total value of the impairment loss you have recognizing the pattern. Let's what you call changes to plan of sale. Now let's assume that we decide to sell an asset. Now we are changing our mind. We're no longer selling. What do we do? Okay. If an asset or disposal group has been classified as held for sale, but the criteria are no longer met, it must be removed from this classification. So one, if we decide we're not selling again or we failed any of those conditions, we must remove it from non-current asset held for sale and put it back in our what? Normal non-current assets. Now, such an asset is measured at the lower of one. So look at the amount at which it had been carried if it had never been classified as what? Held for sale. So we measure it at one. What would we have carried the asset? That is cost minus accumulated depreciation. So we treat the asset like the way we should normally have treated the asset if we had not what? If we had not classified as held for sale. Then also compare that to the what? To the recoverable amount at the date of subsequent decision not to sell. Now when we are doing IAS 38, no, sorry, IAS 36 on impairment of asset, you look at what we call recoverable amount more. Okay, now any necessary adjustment to the carrying amount is recognized in income from continuing operations in the same statement of profit or loss caption used to present a gain or loss on assets held for sale. Now, let's look at how do we now present and disclose non-current assets held for sale in our what? Financial statement. That is, how does it appear in our financial statement and what are the information we should disclose about it? It says now, in our statement of financial position presentation, says now, non-current assets classified as held for sale are presented separately from other assets in the statement of what? Financial position. Let me explain that very well. Now, what we mean by that is this. Now, anytime we have a non-current asset classified as held for sale, it must appear as a line item. What is a line item in our financial statement? A line item means that the item is going to appear separately. It's going to stand on its own. Let's take an example. Can I have a statement of financial? We're still going to look at the practical example as we move on. Can I have a financial statement? You have your your non-current asset, you have your PPE, investment property, inventory, all those items they will stand and they have their value in their statement of financial position. Please, your non-current asset held for sale must also appear separately. You must put it and put the value apart from what other items in your statement of financial position. It says now, the asset and liabilities of a disposal group must also be what? Presented separately from other assets and liabilities in the statement of financial position. This asset and liabilities must not be offset and presented as a single amount. Now, the major classes of asset and liabilities classified as held for sale must be separately disclosed either on the face of the statement of financial position or in the words notes to the account. We're going to look at the practical example where I'm going to explain that better. Now, it says now, this disclosure is not required for disposal group that are newly acquired subsidiaries that are classified as held for sale on acquisition. Now, please, very importantly, I want you to write this down. Comparatives are not restated to reflect the classification in the statement of financial position for the latest period presented. What are comparatives? Comparatives are your previous year figure. Normally when you prepare a financial statement, you have your current year figure and your previous year figure. Please note that when you are doing non-current asset held for sale, you don't adjust your previous year figures or your comparative figures. Write it down. For non-current asset held for sale, you don't adjust your what? Your previous year figures or your comparative figures. You only adjust figures for your what? For your current year. So let's take an example. Let's say that we had a motor vehicle. As at last year, that motor vehicle was part of our what? PPE. We decided that we're still using it. But this year, we now said we want to classify it as held for sale. So in our financial statement this year, that motor vehicle will appear as what? Non-current asset held for sale. While last year it will appear as what? PPE. So we don't adjust the way our figures are last year. That's where we leave it. We only adjust our figures for this what? This current year. All right. So let's move on now. Let's look at gains or losses. Okay, says now any gain or loss on the measurement of a non-current asset or disposal group classified as held for sale that does not meet the definition of a discontinued operation is included in profit or loss from continued operation. The gain or loss recognized on measuring or remeasuring a non-current asset or disposal group classified as held for sale is disclosed. If it is not presented separately on the face of the statement of profit or loss, the caption that includes that gain or loss must also be what? Disclosed. That's very simple. It's explaining the fact that for our gain or loss that we recognize on non-current asset held for sale, we must what? Disclose it in our what? Statement of profit or loss. Okay. All right. Now, what are the other disclosures? Please take note of disclosure requirements. In fact, you must be writing those disclosure requirements because these are 2-3 marks question in the exam. And at times, those 2-3 marks question can be what actually differentiates somebody who passes and somebody who what? Fails. So please, you just say a short question. Mention two disclosure requirement of IFRS 5, 2 marks, 3 marks. So disclosure requirement, please pay attention to it comes out too. Might not carry a lot of mark, but it can be the saving grace uh for students at times to just scale through and pass that particular course. So it says now the following information must be disclosed in notes in the period in which a non-current asset or disposal group has classified as held for sale. So one, we must show what we must disclose a description of the non-current asset. When I said to write the three down, description of the non-current asset held for sale. So that means we talk about what's the non-current asset that were classified as held for sale. It's one of the facts and circumstances of the sale or leading to the expected disposal and the expected manner and timing of that disposal. If applicable, the segment in which the non-current asset or disposal group is presented in accordance with IFRS 8 operating segment. So those are the three information we should disclose about the non-current assets in our financial statement. Then what if we have a changes to a plan of sale? What if we are deciding that we are no longer selling? What happens? When this occurs, the following must be disclosed. One, a description of the fact and circumstances leading to the what? Decision. We tell them why are we no longer selling or deciding to sell, the effect of this their decision on the result of operations for the period, and any prior period presented. Now, let's look at the last aspect of IFRS 5, which is discontinued operation. After IFRS 5, we look at three items. Look at one, our non-current asset held for sale, our disposal group, and our discontinued. So I've looked at non-current asset held for sale. I told you that when you are selling just one asset, it's called a what? Non-current asset held for sale. A disposal group is when you are disposing of a group of assets in a single transaction. That's called a disposal group. Now let's look at the third part, a discontinued operation. It says now IFRS 5 non-current asset held for sale and discontinued operation set out requirements for disclosure of financial information relating to what? Discontinued operation. The reason for requiring disclosure of information about discontinued operation is as follows. One, closing down some operations will affect the future financial prospect of the entity. It is therefore appropriate that users of financial statement should be provided with relevant information about the what? Discontinuation. Please write this down. That's come out once, at least once or twice in the exam. They'll ask you, why should you disclose information about discontinued operations in your financial statement? Tell them that one, because if and discontinued operation is that we are closing down or shutting down a part of the business. If we are discontinuing a part of the business, obviously it's going to affect what? The future financial prospect, because it's going to affect our profitability, affect our financial stability and those other things. Then we must show users of financial statement the effect of what? Closing down or shutting down that aspect of the what? Business. That's the reason why we must disclose information about discontinued operations in our what? Financial statement. Okay, now let's look at what is a discontinued operation. This, please write it down so it comes out. You can ask you, what is a discontinued operation? Define a discontinued operation as required by what? IFRS 5, or as defined by IFRS 5. It says now, a discontinued operation is a disposal group that satisfies some extra criteria. IFRS 5 does not say as much, but let's look at it now. What's a discontinued operation? It says now, a discontinued operation, please, I said you should write it down, is a component of an entity that either has been disposed of or is classified as what? Held for sale. I'll come again. A discontinued operation is a component of an entity that either has been classified as disposed of, we have sold it off, or we are classifying it as, that means we intend to sell. So if we have a component of an entity that we have sold or we are intending to sell, please, that's called a what? Discontinued operation. Please note that the word that differentiates a discontinued operation from other things is that it must be a component of what? An entity. Look at that word, component. Now, let's now look at what do we mean by component. That's what we want to define now under this 1, 2, 3 that you have there. Now, please, a component represents a separate major line of business or geographical area of what? Operations. It's part of a single coordinated plan to dispose of a separate major line of business or geographical area of operations, and is a subsidiary acquired exclusively with a view to what? Reselling. Now, come again. Now, a discontinued operation represents a separate major line of business or geographical area of operations. Please, when we talk of a component of an entity, that means that component is one, a separate major line of business. That means now, there are some companies or entities that have different lines or different major divisions of business. For example, you can have a company, they are into event planning, they are into properties, they rent properties, then they are also into hotel. Now you can have, let's say, some very big hotels. You see that they do normal hotel services. You can come there, they have restaurants, they can also be doing catering services, go to parties and do things for people. They can also have, so you can have a business that has different segments that generate information. Now anytime they are selling off a major line of business, or they are selling off a major, yeah, that's what, major line of business, or something that brings income that can be separated, that's what they call a component. So class is called a what? Discontinued operation. Next is a geographical area of operation. Geographical area of operation is that when they are selling their business in a particular area that is geographically, for example, you have GTB. GTB is all over Nigeria. They have in the southwest, they have in the southeast, they have in the north. If GTB says that they intend to sell off their operations in the southwest part of Nigeria, that's a geographical area of operation. That is a what? Discontinued operation. So I'll come again. A component is what? A separate major line of business or geographical area of what? Operation. Then it's part of a single coordinated plan to dispose of a separate major line of business or geographical area of operations. So that means it's still, that means we want to sell it off, but we want to be selling off in what? In bits, but it is still part of a total plan to sell off that either the major line of business or geographical area of operation. Then when we acquire a subsidiary with the intention of just what? Reselling the subsidiary, that's also a what? Discontinued operation. It says now, if an entity disposes of an individual non-current asset or plans to dispose of an individual asset in the immediate future, this is not classified as what? Discontinued operation, unless the asset meets the definition of component of what? An entity. So if we are selling just one single asset, we cannot classify it as discontinued operation unless that asset is a what? A separate major line of business or geographical area of operation. Says now, the asset disposal should simply be accounted for in the normal way, with the gain or loss on disposal included in the operating profit for that particular year. An operation cannot be classified as discontinued in the statement of financial position if the criteria for classifying it as discontinued are met after the end of the what? Reporting period. We've discussed that before. Please, if they are meeting the conditions after the reporting date, we cannot classify ourselves. So they must have met the conditions on or before the what? Reporting date. For example, suppose that an entity with a financial year ending 30th June shut down a major line of business in July and put another major line of business up for sale. You know that the accounting end is June. They are deciding to sell in July, or they have sold in July. Please, they cannot classify as what? Discontinued operation. Why? Because they sold or they intend to sell after the what? After the accounting year end or reporting day, which is what? June. Okay, so it says you cannot classify this as discontinued operation. They can only what? Disclose one or two information about it in the notes to the what? Financial statement. Okay, now, all right. Now let's look at an example of a discontinued operation. It says now, for example, a company that operates in both shipbuilding and travel and tourism might decide to put its shipbuilding division up for sale. If the circumstances meet the definition of held for sale in IFRS 5, the shipbuilding division will be a disposal group held for what? Held for sale. Okay, great. Now, let's look at presentation and disclosure of discontinued operations now. Let's start from presentation in the statement of profit or loss. Now, the following must be disclosed for discontinued operations. One, a single amount on the face of the statement of profit or loss comprising the total of. So what are the information we must disclose about discontinued operations in our statement of profit or loss? So for discontinued operations, we are going to disclose information about it in two places. One, our statement of financial position and our statement of profit or loss. And we're going to look at a practical example together. We're going to look at a financial statement and see how we're supposed to present the information. It says now, so we are going to disclose one, a single amount on the face of the statement of profit or loss, comprising one, post-tax profit or loss of discontinued operation, the post-tax gain or loss recognized on the measurement to fair value less cost to sell on disposal of the asset, okay, an analysis of this single amount, the revenue expenses and pre-tax profit or loss of discontinued operation, related income tax expense, the gain or loss recognized on measurement to fair value less cost to sell. Now, it says now, the analysis may be presented in the note on the face of the statement of profit or loss. Don't worry, I'll explain this very well with a financial statement now. Okay, it says now, okay, if presented on the face of the statement of profit or loss, it must be presented in a section identified as relating to what? Discontinued operation. The analysis is not required for disposal groups that are newly acquired subsidiaries that are classified as held for sale on acquisition. Then please, in your cash flow statement, you are going to adjust for what? Discontinued operations. The net cash flow attributable to operating, investing and financing activities of discontinued operations. Okay. Now these disclosures may be presented in the note or on the face of the financial statement. These disclosures are not required for disposal goods that are newly acquired subsidiaries that are classified as held for sale on acquisition. Okay, now let's look at what you call comparatives. Remember I told that if it's a non-current asset held for sale or a disposal group, you only disclose or you only adjust your what? Your current year. But please, for your discontinued operation, write this down. You adjust your previous year figure for your what? Statement of profit or loss. For non-current asset held for sale, you don't adjust your previous year in your statement of financial position. Please, but for a discontinued operation, you must adjust or you must restate your previous year figures for what? For discontinued operations. Okay, now let's look at the example. I said I'm going to show a practical example. It says now, example. Information relating to discontinued operation might be presented as follows. See like a statement of profit or loss. X Limited. Now, this X Limited, they closed or they shut down some part of their business operation. So we want to see how are they going to show that information in their statement of profit or loss. Now look at it. We have 20x9 and 20x8. Those are the years. So let's go. Now, anytime you want to disclose information about discontinued operations in your statement of profit or loss, you are going to divide your finance statement of profit or loss into two. I'm going to divide it into two parts. The first one is called what? Continuing operations, and the second one is called what? Discontinued operations. Now, what are continuing operations? Continuing operations are the operations that we have not shut down or we have not closed down. The one we are still currently running, we call it what? Continuing operations. So we disclose our normal information about it. Look at this statement of profit or loss. So you see that we have revenue, we have cost of sales, we have gross profit, we have other income, just like the way your normal statement of profit or loss is going to be. You have your distribution cost, you have your administrative expenses, you have your other expenses, you have your finance cost, you have your profit before tax, income tax expense. Look at it, the normal your financial statement. They have profit for the period from continuing what? Operation. So look at it. This year was 600, last year was what? 800. Then you now have your what? Discontinued operations. You see, we now show information about discontinued operations separately. You have profit for the period from discontinued operation is what? 250 and 180. So when you now add the two profits together, you now get your what? 850. See, previous year you had what? 980. So please, that's how you do it. So you separate it into two. You first analyze the figures you are getting from your what? Your normal operations, which you have not discontinued, which is called what? Continuing operations. You now also do the one for what? Discontinued operations. So you must show each of them what? Separately. Now let's go. Let's go to this note. It says now, the single figure of 250,000 for after tax profit or loss from discontinued operation should be analyzed in a note to the account. Alternatively, the analysis could be given on the face of the statement of what? Profit or loss. So very importantly, we are saying that, see, you know that here, under profit from discontinued operations, we just gave 250 and 180. This 250 and 180, that's the part of our operations that we have shut down. The profit we have gotten from it before we shut it down, or the loss we had from it. Please, now you have two options. You can either show, when we're doing continuing operations, we analyze everything one by one. For discontinued operation, you can also analyze one by one, come up with your revenue, your cost of sale, your gross profit, your other expenses, your income tax, show everything. Or you can do it like the way they did it here. You see that they just came to present one figure like this. In their notes to the financial statement, they are now going to break this down and then start explaining how they arrived at this 250 and what? 180. So you have two options. One, show for discontinued operation, just show a single figure in your statement of profit or loss and then go to your notes to go and explain, or show everything on your statement of what? Profit or loss. For this example we are looking at, see, what they did is that what? They showed it what? They showed it as a single figure, and then in the notes to the account, they'll come and explain and analyze how they arrived at this what? This figure. All right. Now let's go to our statement of financial position. Now, for assets and liabilities that are disposal group or discontinued operation, in our statement of financial position, let's look at how do we present it. It says now, an entity has two disposal group held for sale. You have group 1 and group 2. Under group 1, the total property, plant and equipment I want to sell is 600. Group 2 is 300. So we now have a total of how much? 900. Our liabilities, we have 50 and we have 20, making a total of what? 70. Let's see, how can we present this information in our statement of financial position? Now let's look at this. Look at our statement of financial position. Now we have assets. We have our non-current asset, which is 2,000. We have our current asset, which is 720. Now look at it. This is what we mean by separate disclosure, separately presenting it in our statement of financial position. Now look at your non-current asset classified as held for sale, 900. You see that we put it what? Separately. Please, that's what I mean by what? Present separately. So you see that you are not merging it with any other assets. It's appearing what? On its own in your statement of financial position. Let's go to liabilities too. Under liabilities, you can see liabilities directly associated with non-current assets here. So please, that one too, you are going to classify it what? Separately. You will disclose it and you not add it to any other figure. It will stand on its own. All right, great. Okay, let's move on now. Okay, so you say in the statement of financial position, the comparative figures for the previous year are not restated. I've explained that. Please, for discontinued operation, your statement of profit or loss, you adjust your what? Your previous year figure. But for your statement of financial position, you don't adjust your what? Previous year figure. All right. Now, let's look at other disclosures. What are the other information we should disclose about discontinued operations? Okay. It says now, sometimes there's a need to adjust amounts previously presented in discontinued operations that are directly related to the disposal of discontinued operations in a prior period. For example, circumstances in which adjustments may arise include: 1, disposal, e.g. purchase price adjustment, obligations retained by the seller. Such adjustments are classified separately in discontinued operations and the nature and amount of the adjustments are disclosed. Okay, now please, let's quickly look at this. In your statement of cash flow too, you must present information about discontinued operation. So for discontinued operation, we are going to do 3 statements. We are going to adjust our statement of profit or loss, adjust our statement of financial position, and adjust our statement of what? Cash flow. How do I adjust our statement of cash flow? Under our statement of cash flow, we have not done. We'll still look at it together to already solve a lot of questions on it. Under our statement of cash flow, we have three headings: cash flow from operating activities, cash flow from investing activities, and cash flow from what? Financing activities. So please, under it, just like we did our statement of profit or loss, we splitted it into two. Under our cash flow statement, we are going to split each of those sections into two. So under cash flow from operating activities, we first start from continuing operations. Show all the cash flow from continuing operations. Then we now show the one for discontinued operations what? Separately. And we're going to do that for all the items in our what? Statement of all the segments in our statement of cash flow. Okay, now, then what are the additional disclosures we should disclose about discontinued operation? One, a description of the non-current asset or disposal group, a description of the fact and circumstances of the sale. Then in the case of operation and non-current asset held for sale, a description of the fact and circumstances leading to the expected disposal and the expected manner and timing of the disposal. Now, lastly, before we move, let's look at two more things before we round up IFRS 5. It says now, what of non-current assets that are to be abandoned? Now, so that non-current assets that are to be abandoned are non-current assets that you will not sell. We are going to use it to the end of the what? Economic life. We are going to use it and finish using it. For those non-current assets, please, they are called non-current assets to be abandoned. Please note that if you are abandoning a non-current asset, normally you should not classify it as what? Held for sale. Because like I told you, held for sale means that we intend to what? Sell. So for a non-current asset that is to be abandoned, you don't classify as held for sale. But if that non-current asset that is to be abandoned meets the definition of a component of an entity under discontinued operation. Remember I said the component is what? A separate major line of business or geographical what? Area of operations. In that case or scenario, you can now classify that as what? A discontinued operation. All right. Then let's look at what we call judgment under IFRS 5. Please, this can also come out in the exam. Please now, disclosure about asset held for sale and discontinued operation is intended to help users understand the implications for future results and cash flow. The classification is based on actions taken by management at or before the reporting date and expectation that the sale will be achieved. Application of this standard requires different judgment and estimates to be made, which would have an impact on figures reported in the financial statement. This include the following: whether the held for sale criteria are satisfied, whether a disposal is a what? Discontinued operation. All right. What they are saying there is this. Let me explain very well. What they are saying is this: there are sometimes that when you are using or when you are applying IFRS 5, you have to use your professional judgment. You have to, the judgment has to be subjective. That means you have to decide some things based on your own professional opinion. Now, what are the areas? Can I ask you an exam? What are the areas where you need your professional judgment when applying IFRS 5? They are just two. One, when you want to check whether we have met those conditions, you have to apply your professional judgment, and whether a disposal group is a discontinued operation, so you have to also what? Use your professional judgment or discretion. Let's take an example. Let's look at all those conditions under uh all those criteria we have to meet. Remember, we said the first one is that the asset must be available for sale in its present condition, subject to terms that are customary to such sale. All right. Now, please note that if you want to determine whether an asset is available for immediate sale, there's no standard to judge that. You can only decide based on the scenario. Some people might say that this asset, okay, let's even take a more simple example. One of the criteria is that the asset must be marketed for sale at a price that is reasonable in the market. That is, they must market it at a price that is reasonable in the market. How do we determine a price that is reasonable in the market? You don't have a standard price. Somebody might say that, okay, let's say the market price is 5 million. We offer to sell it for 4.8 million. A professional might say that this is not reasonable. That is not, the price is not close to the market price. Another professional might come and say that it is close to the market price. So you see that everybody is now applying their own judgment. That's what they mean by what? Judgment. So we apply judgment in two major areas in IFRS 5. When we are testing whether the conditions to be classified as held for sale are met, and when we are deciding whether a disposal group qualifies for discontinued operation. We want to test, is it a component? So we want to say, is it a separate major line of business or geographical what? Area of operation. So that's IFRS 5. Thank you very much.